Let me take it across to Bhavin Shah, the founder at Samiksha Capital, to get a sense as to what the road forward will be for the market. Bhavin, hi, good to be speaking with you. To begin with, a very pointed question, and if you can answer in a yes or no, what do you think, Bhavin? Will the election verdict mark the top for the markets for this year?
Answer is no.
Okay, so there's more leg to that rally. So now let's take that discussion forward then. If that's not the case, what do you think is the biggest monitorable for the market right now? Do you think the policy action and continuity is something which is the driving force? Or do you think it's going back to fundamentals and earnings is something which is getting, which is actually putting the markets higher from here on?
So I think what is clear is that we have a very strong economy and very broad-based growth that is being witnessed. And when that happens, a large number of companies experience good earnings growth. And so I think it will actually boil down to the fundamentals and strong earnings growth that will help the market move forward. It may not be a meaningful move given where we are already. But I think it is important. I think the bias will be on the positive side.
The bias is on the positive side, but then that becomes the question: how are you positioning your portfolio at this point of time? Are you, let's say, increasing your cash levels to deploy further, or have you already started deploying quite a bit? What's the tactical trade right now ahead of elections?
We are perhaps not doing anything different from what we normally do. We look at the stocks that we have. We look at incremental next 2 to 3 years, what sort of returns can we generate from every single stock we have. And when those returns look very low, or if our thesis is not working well, we exit those stocks. And at times we have a lot of new ideas to invest. At times we don't. Very honestly, today we probably may not have so many good ideas to invest. And so yes, there will be some cash that will come out because we are selling some positions. But that is not really a tactical call on the election outcome and so on and so forth. Because I think at least the view we have taken is that there won't be any big surprise for the market coming, in terms of the election outcome.
Yeah, that seems to be the base case which is priced in, that there'll be continuity of the policy action and wouldn't be a surprise or a shocker in either sense. But you talked about trimming positions in certain segments and sectors. Talk to me about where are you, let's say, taking profits off the table, and where are you incrementally deploying it, as in which sectors you're underweight versus overweight on?
So I won't be, I don't know, because we don't really look at underweight, overweight. We hardly look at the index weights and try to play around that. We are really driven up by the bottom of opportunities, both in the sector, in the context of a sector, as well as companies. But yeah, we continue to invest further in pharma/healthcare, for example. We continue to stay invested in some specific technology-related names, not so much the IT services, but companies sort of benefiting from India's economic growth and having a technology play. So we continue to invest or maybe even add there. We're trimming a little bit in some financial services names and also in some consumer related plays where we think that the stocks have done what they could have and so on.
But what's your view on the entire PSU basket? And I'm talking about defense and industrials and other names at that, because they've seen a massive run up, whether it was railways and defense companies as well, even PSU banks for that matter, and OMCs, etc. Would it be a better call right now to book some profits, or do you think this is just the start of that multi-year upcycle in some of these segments, and perhaps it's good to continue to stay invested in these?
Well, I think the challenge here is that a lot of stocks especially in the PSU segment, have priced in multi-year, very strong growth for multiple years. And so once you do that, it's difficult for us to find a lot of opportunities in that segment. Public sector banks perhaps are still relatively attractively valued, and one could look at that. But we are getting that exposure more through an ETF rather than individual bank. But yes, I would say that even though the fundamentals may be robust and maybe the stocks go up because people like to chase momentum, that is not the game that we play.
Okay, you're clearly not in that game, but just let's come back to the base case scenario that you were talking about, which is the continuity of the government. What do you think will be the next focus area? Do you think it will continue to be the capital expenditure and these themes of, railways, defense, etc., that will be the focus point for the government, or you're expecting big reforms in taxation or the social spending to go up?
I think, they have hinted at, reforming taxation further. So I think we can even there has been comment about rationalizing some of the GST rates, for example, looking at the direct export, again, and so on and so forth. So I think some reforms are very possible, and I think it is unlikely to be something which will hurt the market. I think just looking at the commentary from we have heard commentary from finance minister, prime minister, and other important members of the party, and I think they all seem to be talking very one direction on this regard. So I would really be surprised if anything negative on those items on taxation comes through for post budget. Sorry, post election.
Let's see what really happens. I think we'll only get to know it later, what exactly is cooking there. But before I let you go, Bhavin, one quick word as a, let's say at the portfolio level, what do you think will be the best performing asset class for the year? Is it still going to be equities, or do you think the run which has been there in gold and silver tells you that perhaps those could be the big outliers this year, or it could be just perhaps government debt, etc.? Which do you think will be the best asset class for the year, and where would you want to incrementally put money into?
Hard to say. I mean, when you say year, you're probably talking about financial year. Really haven't thought about that, in that regard. And I think, I would say that equities will still give decent returns. Whether or not gold and so on can exceed that, I think that I don't really have a view.
No worries. Thanks so much, Bhavin, for making time and speaking with us. Good chatting with you. So that's the verdict coming in.
If you like this video, then like, share and subscribe to ET Now.